KC Mathews, we're nearing the end of second quarter earnings season. So what's your biggest takeaway so far from what you've heard?
Well, earnings are still mixed. Certain industries have headwinds, such as currencies and things like that. Other industries are doing fine with decent growth numbers. I think it's going to be a quarter or two until we get back to robust earnings growth.
All right, well, can you talk about the impact of currency in the second quarter? It was a big deal in the first quarter. What about in Q2?
I believe it'll be a big deal in the second quarter as well. I think you're going to see continued strength in the dollar, which will be negative for global conglomerates. I think once we get some stabilization in currencies, it will help these global conglomerates. But until then, it's going to be a struggle. And I think the dollar will remain strong for quite some time because the U.S. economy is doing fine. Call it, we just saw 2.3% in the second quarter. I think we'll see something like 2 to 2.5% for the year. But the other issue is global economies. Global economies continue to struggle, and that will lead to a strong dollar.
All right, let's talk about the Chinese economy. From what we've heard, it has impacted some American companies. We heard from United Technologies. They said that it slowed down their Otis division. How will China slowing, how heavily will it weigh on U.S. companies going forward?
The issue there is what is the accurate number, accurate data out of China. No one really knows. Of course, the government's telling us 7% growth. We don't believe that. When you look at some of the supporting data, such as railcar volume or electricity consumption, I don't think the economy is growing anywhere near 7%. The issue will be, is it growing at 6, which will be fine? You got a $13 trillion economy growing at 6%, not bad. Or is it growing at 4% or something less than that? We're in the camp that's probably around 6% or so. So I don't think it'll have major repercussions through the U.S. economy. Long term, we'll have to watch it, see what happens there. Short term, we're more focused on Europe. What's going to happen with Greece and the impact on the Eurozone growth at 1% last year. Can we do it again? When you look at credit production, it's turning over. So we think quantitative easing was working in Europe with credit growth, and now all of a sudden we're seeing it turn, and we're concerned about Europe and the impact it might have on U.S.
All right, let's talk about the banks now. The banks started off earnings season very, very strong. Some good reports from the likes of JP Morgan and Bank of America. A lot of people say in order for the stock market to head up, the financials have to lead. Will that be the case in the second half?
Yeah, well, I agree with that, and I do think you'll see some positive returns from the finance sector. One reason is the anticipation of higher rates. When you look at interest rate spreads, banks want to have higher interest rates. We're in the camp that the Fed will move interest rates sometime this fall. Whether it's the September meeting, October meeting, to us it doesn't really matter. But we do expect the Fed to move, and that will allow banks to increase their net interest margins. So we are favorable on finance, and we think they'll perform well in the second half of 2015.
That said, should investors go out there and fight the Fed if we are going to get higher rates from the Fed? Is that an environment where you want to be long and bullish on stocks?
Well, you want to be long certain sectors, perhaps like finance, but I do think that there's enough economic data there, 2.3% economic growth in the second quarter. I think more growth in the second half of 2015, and that will allow the Fed to increase interest rates as well as allow the stock market to continue to expand.
All right, thanks a lot, KC.
Thank you.
And thank you for watching The Street.